Distinguished guests, welcome to day 2 of the second Incheon Law and Business Forum, which is co-organized by the United Nations Commission on International Trade Law, Regional Center for Asia and the Pacific, the Ministry of Justice, the Republic of Korea, as well as the Incheon Metropolitan City, and supported by the Hong Kong International Arbitration Center and the Korean Commercial Arbitration Board International. I'm Eun Nam, legal expert at UNCITRAL RCAP, on secondment from the Korean Ministry of Justice. It's my great pleasure to be your MC for this forum. Day 2 of the event comprised 3 panels covering MSMEs and digital economy, insolvency, and dispute resolution. Before beginning day 2, may I remind all participants of housekeeping matters. The event will be recorded and be posted on the UNCITRAL event webpage, along with the presentation slide with the consent of the speakers in due course. The program and speaker bio notes can be also found on the webpage. Our event facilitator, UNCITRAL RCAP legal expert Jenny Hui, will be posting links to the relevant material, including UNCITRAL text, in the chat box throughout the event. For our panelists, please remain muted with your cameras off unless you are speaking. Group capture with your fellow panelists will be taken at the beginning or at the end of each panel at the prompt of your moderator. For IRBF participants, thank you for your advanced questions. Additional questions are welcomed via the Q&A box and will be addressed during the Q&A session at the end of each panel. Due to time limitations, panelists may not be able to address all the questions. If you have technical difficulties, please email uncitral.rcap@un.org. Without further ado, we will start our first session of day 2 with panel 3 on MSMEs in the digital age, moderated by Mr. Alexander Kunzelman, Legal Officer, UNCITRAL. Alex services UNCITRAL Working Group 4 on electronic commerce, which is working on electronic identification and trust services. He is also in charge of exploratory work at UNCITRAL on legal issues related to the digital economy, where he is looking into the use of artificial intelligence and automation in commercial contracting, data transactions, distributed ledger technology, online platforms, and the use of digital assets in trade. May I pass the floor to Alex?
Thank you very much, Un, and it's a pleasure to be here for this panel to start day 2 of the forum. Look, as you mentioned, as I'm working on the digital economy project at UNCITRAL, which is looking into legal issues raised by various tools used by business to engage with the digital economy, including data, AI, automation, and digital platforms. So personally, for me, this panel is an excellent opportunity to hear about the experiences of MSMEs in their navigation of the digital economy, as well as the practices of digital service providers in their relations with those MSMEs. And so really putting a legal spin on it, insights into the gaps of in the current legal settings are really an added benefit for me beyond the practical experiences, which I'm very keen to hear, because I will be the first to admit that sometimes legal aspects of digital transformation are not always readily apparent. Regrettably, as Un just mentioned, we only have limited time for this panel, 50 minutes to hear from all of our excellent 5 panelists. So let's get cracking. First up, we have Charlie Gordon from the International Chamber of Commerce, who will provide us with a global snapshot of MSMEs and digital transformation. We will then zoom into the region to hear the experiences of MSMEs in different countries and different sectors of the economy. First, from Sutapa Amonuat, CEO of SCB Abacus, who will be presenting on the use of digital technologies for access to credit in Thailand. And then from Sam Saili, CEO of SkyEye, who will present on the use of a new digital platform to trade and pay in Samoa. And finally, from Ratana Kalabut, private sector development specialist, who will present on going digital in Cambodia and the experiences of women entrepreneurs. Finally, we will zoom out again and change gears somewhat as Eric Vermeulen presents on how digital technology is transforming corporate governance and the opportunities that a new digitally enabled ecosystem presents for MSMEs. And speaking of Zoom, I hope that I will not forget at the end of this panel to get a screenshot of our panelists. And I'm sure you will remind me or give me a nudge virtually. So, Charlie, I am very pleased to hand you the floor to kickstart our discussion, please.
Thank you so much, Alex. Good afternoon, everyone. I'm Charlie Gordon. I'm Deputy Director at the Policy Department, the International Chamber of Commerce, and I'm really thrilled to take part in this event alongside such a distinguished and diverse set of participants. So for the next few minutes, I will be highlighting how digital technologies can help empower SMEs to trade internationally, to really try to give you a sense of the challenges digital technologies help tackle, and what are some of the barriers that need to be addressed. But before I do so, perhaps I can say just a very few words about the International Chamber of Commerce. So the ICC is a business association. We're based in Paris. We have local committees in about 100 countries. And all in all, we represent about 45 million businesses of all sizes, across all sectors, and across all geographies. In terms of activities, we do three things. We do policy advocacy, we do standard setting, and dispute resolution, with really the overarching objectives of promoting international trade, promoting responsible business conduct, and promoting a global approach to regulation. So I think you can't really overstate the importance of SMEs for national economies. SMEs represent more than 90% businesses and more than 60% of employment worldwide. And in many ways, they're the backbone of local communities. And very importantly, there's also ample evidence that SMEs tend to foster greater inclusion and diversity in the workforce, and generate more sustainable growth over time. And so given the importance of SMEs to national economies, policymakers have often encouraged the internationalization of SMEs as a way to promote growth and spur job creation. And indeed, at a microeconomic level, SMEs have got a lot to gain from international trade. International trade often drives product and process innovation. It drives cost efficiencies, and overall it enhances competitiveness and profitability. And yet, in spite of their contribution to national economies, and in spite very often of fairly supportive policy initiatives from national governments, SMEs tend to be underrepresented in international trade. Their share of total direct exports usually hovers around 20%, and very rarely exceeds 40%. And so this really begs the question as to why SMEs account for such a small proportion of exports relative to their share of overall activity and employment. So of course, there's a number of reasons and variables to consider, but in particular, SMEs face significant internal and external barriers to trade internationally. Internal barriers include information efficiencies, human resource constraints, lack of financial flexibility, and generally speaking, smaller firms also face greater challenges in navigating foreign markets, with less capacity to address complex logistical and regulatory requirements. And so there's a bit of a paradox here. International trade is often what enables SMEs to scale and grow, yet a company needs to have reached a certain size in order to manage the risks and costs linked to international trade. Now, of course, one of the ways to bridge this gap is through access to credit. But as I'm sure many of you know, SMEs have a much harder time in securing liquidity than larger businesses. And that's true for a number of reasons we'll see in just a minute. And so in this context, digital technologies have a tremendous role to play in the sense that they can help address some of these issues. Generally speaking, digitalization increases the scale, scope, and speed of trade. Number one, digital technologies reduce barriers to entry. They do that by facilitating access to market intelligence, by providing new marketing and sales tools for customer engagement, and really offering new types of intermediation for product and service delivery. Digital technologies can also lead to substantial efficiency cost savings through paperless operations, through data analytics, and an overall better allocation of internal resources. Digital technologies also enable SMEs to build the necessary network of suppliers and partners that's absolutely critical to integrating global value chains. And finally, digital intermediation can simplify international payments and enhance access to finance, thereby helping solve the international trade conundrum I presented previously. And so all of this can lead to greater resilience and agility for SMEs, two aspects that are absolutely critical to thrive internationally. But of course, digital technologies are not a silver bullet, and they come with their own set of challenges, both at a micro and macro level, particularly given the increased number and the complexity of digital barriers that blunt the positive effects of digital tools. And unfortunately, these barriers disproportionately impact SMEs. I think there are at least three major challenges that need to be addressed by the private sector and policymakers collectively in order to truly empower SMEs. The first one, of course, is digitization itself. There remains significant divides between businesses, and there is fundamentally an uneven playing field when it comes to connectivity and access to digital tools. So this is one area where ICC is particularly active. The second challenge, of course, is cybersecurity. SMEs are often particularly vulnerable to cyber threats and cyber attacks. These attacks have financial repercussions on SMEs, but they also have a chilling effect in the sense that they might lead SMEs to reduce their use of digital technologies over time. And then finally, the third challenge I wanted to briefly mention here is the growing friction in international data flows. I think it's undeniable that complex regulation, data localization rules, diverging standards, among many other things, are creating new hurdles to international data flows and causing friction in global digital supply chains. So really, my objective here was to give you a high-level view of why SMEs struggle to trade internationally in the first place, how digitization can help in this regard, but also highlight some of the challenges that need to be addressed to really empower SMEs to leverage technologies in the context of international trade. And so to conclude, perhaps I can briefly give you a more concrete example of how digital technologies can really help make a difference. As I mentioned earlier, access to credit is absolutely key for SMEs in the sense that it's a way to solve at least partially the international trade conundrum. And unfortunately, there's ample evidence that the trade finance gap is growing. And this is a major problem with critical consequences for SMEs globally, not least in Asia. And our research has shown that this is due principally to information asymmetries and high operational costs for financiers, which leads to high cost of transactions, high risk, and low margins, and ultimately rejected applications for SMEs. But as I suggested earlier, digital technologies and new forms of intermediation can really help solve some of these issues. And this is precisely what we're aiming to do with ICC TradeCom, which is an online marketplace for invoice financing that we're developing and deploying with our partner Finastra. But again, these types of initiatives will be successful only if the private sector and policymakers work together to tackle difficult issues like the interoperability of global digital trade standards, like ensuring data interoperability, and overall building the right infrastructure for digitally enabled international trade. So I'll stop here, but many thanks for your attention, and I'm happy to answer any questions in due course. Thank you.
Thank you so much, Charlie. And certainly, I think if we have time for questions at the end, definitely, I think I found those three challenges that you outlined particularly interesting, as well as those visuals at the end. So, and thank you again for keeping as close as possible to the allotted time. I'm mindful of that as well. So, and next up, I'm delighted to pass the floor to Sutapa Amonluat to present on access to finance. So, please. You have the floor.
Okay, thank you very much. Thank you so much for inviting me. It's my honor to be here to share my experience and my views in digital transformation, especially the digital lending. Just a quick introduction of SCB Abacus. We are, as a company, built an inclusive digital lending platform to offer alternative credit support, which empowers Thais, especially MSMEs, who are mainly the underbanked. Just some of the stats to look at. Thailand's also have considerable gaps in access to mainstream lending. So those who are underserved and underbanked constitute about 80% of Thai households, must resort to loan sharks in varying degrees and face steeper costs to get credit. For the low income segment, we identify as those with monthly income less than $1,000 are less opportune to receive basic financial services such as money transfer, payment, deposits, and also loans. So with traditional data and risk assessment, young entrepreneurs are undermined and lack the opportunities to get funding from legitimate sources. This slide, we want to discuss the vision and our digital lending products. We built our digital lending products to address three main problems. The first one is banks and other traditional lenders still have very low risk appetite, especially for low income households and self-employed segment. Coming from banks, we know that this is mainly because traditional data and also scoring techniques have capped bank ability to classify risk. The new technology and new data footprint available right now have allowed a lot of the new company, the new technologies to better classify risk, particularly for this thin file group. This result generally in high rejection rate, particularly to the unsecured lending space. On the other hand, the low-income household have no choice to borrow from legitimate sources of funding with reasonable interest rate. So we aim to fulfill these opportunity gaps with our technology, risk assessment, and also the privacy by design system. On the technology capabilities, we offer seamless experience in fully automated platform without human intervention in the back end. That's allow us to underwrite within 5 to 20 minutes on average to a new customer. We can service our customers from anywhere and anytime. Within our first week of launch, we were able to underwrite to all 77 provinces in Thailand. On the risk ability, we leverage alternative data sources, machine learning techniques, and to assess risk and better underwrite borrowers. With broadened views of data, we can approve that the unqualified borrowers, such as the thin file, the young and female customers, are actually have strong bank potentials. We also want to make sure that customers can fully entrust their data with us. So we design our consent management system on the get-go in compliance with GDPR from the very beginning. That's allow us to expand our technology internationally. So our digital lending app called Money Thunder has been launched about 20 months ago. We target sole proprietors and low income earners, and the pain points of these two groups are quite similar. They want loan process to be secure, fast, and flexible. And also, we also reward them with delights for good behavior. If they continue to repay on time, they will be eligible for additional loans, or the good repayment behavior also earn loyalty points and referral benefit. So just want to revisit the stats that I showed earlier on the second slide. So after about 20 months, we can turn these stats around. Our alternative lending product approved those who were denied by banks. We help those who were suffered by predatory lending, and almost all of our customers, or 90% of our customers, are in the low income segment. And we can also give an opportunity to young segments less than 25 years old, which traditional lenders are not likely to offer them loans. So just want to touch on the points from the policy perspective. Obviously, there's a lot of innovation in the market that can actually provide a better access through innovation. However, there are three aspects that I would like to highlight. One is the lack of open data policy, whereby customers know their rights to share data and also knowledgeable about pros and cons of data sharing. And the industry, with customer consent, industries, institutions, and government should then be able to share data across entities. I want to highlight that a common platform facilitating payment and data flows among banks and non-banks can really help build a digital transaction footprint for every player in the market. The second challenge is a balance between regulation and innovation. I hope that regulators would look to encourage innovations which tackle social problem and benefit underserved population through allowing for more relaxed market regulation. For digital lending industry, closing the gap between formal and informal credits could be one of the first steps for regulators to take. In Thailand, the interest rate cap for formal nano loans is 33% APR. That's significantly smaller than rates for informal lenders at about 100 to 200 APR. So by raising the informal interest rate cap, formal institutions can further target underserved segments while hedging increased risk. The last point that I would like to touch on is instead of control, I hope the government would play a bigger role in providing public goods such as financial and digital literacy. The new players are ready to serve, and however, the key barriers is the limited financial and digital literacy. The need to improve digital literacy is even more crucial during this pandemic time, and policymakers should aim not only to teach population to understand the digital financial service, but also to build trust and know how to protect themselves in the system. That's pretty much highlight the points that I want to make on the policy side, and happy to answer any questions.
Thank you so much, Dr. Amonriwat. I particularly am interested in hearing about the data policy questions you raised about open data, and also this idea of the common common platforms. These are two aspects that, of course, we're also monitoring quite closely at UNCITRAL to see where that fits in with the types of work we do in an international business context. But without dwelling on that any further, it's my pleasure now to hand the floor to Sam Saili, joining us from Samoa. I suppose it's a much later good evening to you, Sam.
Good evening. Thank you very much for the opportunity for a very small country and a very small company from the middle of the Pacific to present on this prestigious forum. So the presentation today is about digital economy for the unbanked in Samoa. For those that may not know, Samoa is a small island nation in the middle of the Pacific. We have less than 200,000 people. So we are quite small in terms of not only landmass, but also market size. But the company SkyEye, which is a family-owned and family-run company, is always looking at opportunities to use technology to serve the people. So in looking at digital economy for the unbanked, we had to first talk to the stakeholders. We had to understand and walk in the shoes of our stakeholders, of people that we want to help with the technology or the solution that we come up with. We needed to live the way, the life that they live, and understand the problems and any hurdles that they come up with. And so the problems that we've summarized and we designed our solution around, was one of them was transport, public transport. For any vendor to sell their produce, they always need to have transport to go to a market. But public transport in the Pacific is quite unreliable and expensive. So that was a major hurdle that they always bring up in our consultation. Access to market if they do get to a market, there's always the issue of whether they will be able to sell all their produce. They will also need to pay for the market access for a spot at the market. And as with the current environment now with the epidemic, a lot of markets are now closed. So this is another major hurdle. A lot of our stakeholders are women that live in the rural areas, and they usually have young families. And they have to decide between taking their children to the market if they want to participate in economic empowerment, or stay home and look after the kids. And taking your children to the market is also not a very family-friendly environment to bring up the children. Cash, this is the predominant way of payment in the islands, and it's almost 100%. But with cash, there's issues in terms of theft or losing the money, or very easily spending the money once they come back from the market. So it is a hurdle or a worry that they have. Illiteracy. Now, there are platforms like Facebook and other platforms, social media, but they've started to not trust these platforms now, because our stakeholders say that a lot of orders come through these platforms, but the buyers never turn up on the last day, or on the day to pick up. So they end up making a lot of loss. And then if they are to want to scale up their production, they need to access financing, and any financing services will require records of their sales to ensure that they can finance or they can sustain their financing. So, and because these are informal sector, they have no records of their operations. So these are some of the problems, not all of them. So the solution we came up with, we designed an end-to-end e-commerce platform that is open to the public. So the platform allows anyone to load their products, take a photo of their product, load it on the platform, and register their mobile phone so that they can get payment through mobile money. Now that they have, they can sell from anywhere, like the safety of their home. They do not need to choose between the children and making a living. In terms of the platform, because we integrate mobile money, every order that the vendors get is already paid for. So it's prepaid, so they can trust. And also the platform is in Samoan, so it is a lot more user-friendly. In terms of cash, we have built our own payment gateway because there's no other payment gateway that's available in Samoa and around the Pacific. So we built our own, and we integrated mobile money, Stripe, and also cash on delivery. And because all of these sales are on the platform, it is digital, and the vendors have access to it for as many years that they're on the platform. And in terms of delivery network, we've created a delivery app that we have opened it up to the public. So in short, it's Uber, where we've allowed the public to do the delivery for us or for everyone in the platform. So just a little look at the Q1 and Q2 of this year. As you can see, cash was the predominant payment method, but in Q2, we see cash payments and digital money has become the predominant payment method. Total transactions has increased for 45%. Total sales in volume has increased 69%, and card payments have increased more than 180% from Q1 to Q2 of this year. So we believe in a holistic approach, and this is where we also look at addressing all the SDGs that this platform has to offer. Thank you very much for your time. This is the MAWA app, and we believe in inclusive digital economy that includes our grassroots people. Thank you.
Thank you so much, Sam, and for painting out the problem so clearly and then providing us with the insight into the solution. And if I might add, in parallel, I personally would be grateful if you could provide us with information on how you've integrated the payment system into your platform, because in addition to platforms, one of the areas that we are looking into, although I would say probably more passively, is international or cross-border payments. So yeah, that was very much something that is of interest. And also, if you could please send your grower the bananas and tomatoes our way into Austria. You can see the produce that we have in our supermarkets over here. I couldn't think of anything better than that. Exactly, promoting cross-border trade here. So with that, thank you very much again, Sam. And now I am delighted to introduce Ratana, who, as I said, will be presenting on going digital, if I can use those terms, in Cambodia, and experiences in particular of women. So Ratana, you have the floor. Thank you.
Yes, thank you, Alexander, for the introduction. And good afternoon, everyone. Many thanks to UNCITRAL for inviting me today to share some insights on women entrepreneurs in the digital age. So Cambodia offers an interesting point of view because on the paper, the system is quite supportive with strong collaboration between the public and private sector, recent SME reforms and sizable donors project. Oh, sorry, full screen. Okay. Trends in digital transformation are also interesting. Cambodia has leapfrogged in terms of mobile and smartphone penetration, with a rapid increase of internet users, mainly through smartphones. Facebook plays a disproportionate role and is used, for everything, as main channel of information, communication, advertising, and sales. E-commerce is promising with a recent acceleration due to the COVID-19 situation, but the ecosystem is quite new and immature. In this context, technology is indeed an opportunity for women MSME. It helped to build the foundation for a dynamic tech startup, supported by an active lead ministry and an ambitious program, Digital Cambodia. And it also led to the emergence of women in tech. The profile of this entrepreneur is more young women, urban and well-educated, with access to more support than traditional sector counterparts. But in Cambodia, you also have this very clear gender digital divide. For example, there's a huge gender gap in internet use, 34%, quite the double in comparison with the worldwide, average. There's also a high gap between educated and less educated, in between urban and rural area. This leads, obviously, to less loss opportunities. The financing gap for women MSME is huge, around 4.2 billion. This leads also to less effective policies. Only 5% of MSME are registered in Cambodia, and women are very much afraid, to register. They often feel trapped, in a system where they have little visibility. The consequence is also a much severe impact of COVID-19 on women MSME. So the gender digital divide comes from a mix of lack of technological and social access, lack of ownership from women, inadequate contents, and a lack of participation in the process. And this, despite the fact that the importance of women entrepreneurs is acknowledged. Cambodia has a comprehensive gender strategic plan, the Niri Ratanak 5. They also have, but in fact, this plan was not, there has not been an effective implementation due to a weak institutional capacity and also lack of awareness. The country has also, done major SME reforms. Single portal registration, tax incentive, SME bank, e-commerce law, and also the creation of Khmer Enterprise to support entrepreneurship. And you also have some great donor programs, such as the Catalyzing Women Entrepreneurs presented yesterday by Diana Morris from UNCITRAL, or the Go for ICAM from UNDP. Therefore, there's a need, for a multifaceted approach. So what is needed? Many things, obviously, and I think that a lot have been said, during this forum already. But I pick here, some general observation from the ground. First, at policy level, obviously, to strengthen the implementation of a real gender mainstreaming policy. Second, simplify admin procedures, not only to open a company, but also to close it. The government last year has moved to a very interesting and quite successful single portal registration system, integrating 6 ministries to reduce time and cost for companies. The second phase has just started in July and should integrate 6 more ministries, including the one in charge of MSME. So it is promising. Let's see if it will encourage, more SME to register. We'll see. And in parallel, a lot of efforts still needs to be done to close a company. And in this regard, I think that the work done by UNCITRAL will certainly help, I hope. Last, maybe have a dedicated, admin focal point, for SME, such as one-stop shop, with enough resource, maybe with trained, staff, to deal with women MSME. At ecosystem level, it can be improved and strengthened. There's collaboration, but limited interconnectivity between the players, government, donors, and private sector. We often observe that they don't always speak the same language or understand each other. So that limits, the collective impact. And finally, at program levels, definitely, there's a more differentiated approach needed. Sometimes they tend to focus, on the same area. And maybe some interesting trends to leverage are the importance of feminine role model, young women entrepreneurs in a community-based approach using technology. So to summarize, I would say that digitalization offers indeed interesting opportunities, but has less impact with a significant gender digital divide. Reaching effectively and support women MSME need a slightly differentiated approach. Effective implementation is the key. Good laws make little difference if not properly applied. And before being too ambitious, there's a need, to focus simply on the formalization area, simplify and build trust in the system. Finally, technology is good, but for women MSME, the human factor remains definitely essential. Despite or even because, the very difficult time linked to the COVID-19 crisis. That's it. Thank you for your attention.
Thank you so much, Ratana. And if we could leave that slide on. Oh, we've lost it now.
Sorry.
Just for those. Oh no, don't worry. I just thought they were some very useful takeaways for us. But in that case, it's an opportunity for me to remind all attendees that we have those slides for those panelists consenting. So they will be made publicly accessible. But look, thank you very much again for that very summary overview. And I take this opportunity to thank all panelists so far for doing an amazing job keeping to the allotted time, which we have not made very easy for you. So now that we've had those 3 snapshots of Thailand, Samoa, experiences in Cambodia as well, it gives me great pleasure to change gears somewhat. And introduce Eric, who has presented previously at UNCITRAL forums, and it was indeed in his presentation on contract networking a few years back UNCITRAL held a colloquium where he presented on digital aspects, which I found to be particularly useful to conceptualize the digital economy work that we are doing at UNCITRAL at the moment. So I'll stop talking there and introduce Eric. Please, you have the floor.
Yes, thank you so much. And good morning, good afternoon, and good evening, everybody. I hope you're having an amazing day. Yeah, my name is Eric Vermeulen, and I am a professor at Tilburg University in the Netherlands. I also work at a company called Signify, which is Philips Lighting. So we all know that. But I'm not going to talk about these things. I'm going to talk about something else. I'm also a restaurant owner, together with my wife, and that explains the slide. So the digital age really created huge opportunities for my wife as a restaurant owner and me as the co-owner as well. And basically I call this the end of the cooperation, because what happened was that we took advantage and we got the opportunity to take advantage of the digital world. And what we currently see, and I think we all know this, is that we see digitalization of everything, and we become more and more digital dependent. And we see digital technologies like artificial intelligence, blockchain, the Internet of Things, connectivity, data analytics. They start accelerating and amplifying each other, and that creates exponential growth of technology. And I think the coronavirus only accelerated this trend and the development. And what happened was that because we have this restaurant, and you can see the restaurant in the middle, it was a fantastic building, a very old farmhouse in the Netherlands. It had a Michelin star, and we had to close down. And yeah, I don't know why, but we got an offer to sell the restaurant, and we talked about it, and my wife did. So we sold the building, we sold the brick and mortar restaurant, but we immediately believed that we should continue as a kind of virtual restaurant. And we see this change from the brick and mortar restaurant to kind of a way of life that we created. So it's we call it virtual restaurant, but it's an online experience where of course, people can order food. We then deliver it, and people can then change it a bit. They only have to do a couple of things to get some high-end food on the table. And during the pandemic, obviously, there was a huge demand. And then we thought, now things are opening up in the Netherlands, maybe it slows down. But the opposite is actually true. There's a huge demand for this new kind of experience that we offer. And it's all because of digital technology that has happened. But what we also saw is that we completely changed the way the restaurant was organized. So from kind of a corporate structure, the governance structure that we all know, we have the shareholders, we have a board of management, and we have a lot of employees. And then, of course, we have some contracts with suppliers and people just come in. Now we transformed from like this kind of corporate system to an ecosystem community. And I think digital technology enabled that. And it offers huge opportunities, but also, as was mentioned by the other speakers, some challenges that we will talk about in a second. So what we did is we transformed the business really to an ecosystem, to a community, using QR codes, using blockchain, using the consumers as a marketing tool, because we have user-generated content on all kinds of platforms. We use social media a lot. And we are experimenting now with virtual reality, augmented reality, even in the restaurant business, so people can then have another experience at home. And what we also experiment with is non-fungible tokens. How can we create a community with these tokens, and how can we actually attract capital in a kind of crowdfunding way? And there seemed to be a huge demand there. Now, this all sounds weird to many people, but as a researcher, I also did some research on this. And what happens is that 4 out of the 5 most successful companies in the world today, whether it's the biggest ones or SMEs, are doing exactly the same thing. Viewing business as a community, as an ecosystem, rather than the old-fashioned way. And I think the examples that we hear today kind of show the same thing. It's all about platforms, it's all about ecosystems, it's all about creating communities. Now, to give one example that we all know, and this is definitely not an MSME anymore, but it's Tesla. If you just look at the car industry, all these car manufacturers going to the left, yes, they all offer electrical cars these days, but Tesla is just doing something else, really taking the ecosystem opportunity and run with it. And they view themselves not as a car company anymore, but as a robotics company, as a software company. And if you just do some analytics, you see indeed that the market value per dollar of physical assets of Tesla is much higher than the other car companies, and the market value per employee as well. This kind of shows that Tesla has a completely different business model, viewing themselves as an ecosystem more than a traditional company. Now, back to MSMEs, if you then go to the most successful startups and just take a non-tech startup as an example from the UK, we see there Gymshark. And Gymshark is a sports apparel company. The founder and his wife, I think, now you see on the left-hand side. And in an interview, he showed that, well, my company is a community. And this company is a really good example of how they used new digital technology to grow their company into something really, really big. Very, very successful, viewing it as an ecosystem, viewing it as a community, and not seeing themselves as selling a product, but basically offering an opportunity to people to be part of something bigger and offering an experience to people. So what we see, back to the restaurant, is that we got rid of this old-fashioned way of thinking that we are a company, a legal entity. We offer something to consumers. Consumers come in, we do the normal marketing. We really became flatter, really became kind of an ecosystem where, we get much closer to the consumer. The consumer becomes part of actually what we do and what we offer. And also with respect to payment, we make use of a lot of digital payment tools and systems, and it works really, really well. And surprisingly, also with the older clients and customers and consumers that we have. So the challenges, I think, for regulators is to become part and really understand this ecosystem, really understand what the challenges are with respect to blockchain, with respect to non-fungible tokens, with respect to artificial intelligence, because that would be really, really helpful to MSMEs. Thank you very much for your attention, and I look forward to any questions that we still might have.
Thank you so much, Eric. And if I could say, together with Sam's presentation, I think the representation of food is a good analogy of the food for thought that this panel has presented. I thought I'd just throw in a bit of a dad joke there to end the session. Talking about questions, I think we're very close to the end of our allotted time. So regrettably, I don't think we'll have time for any questions. But of course, at the last minute, while I do a quick sum up, if anyone in our audience has any questions that they would like to pose to the panelists, perhaps with the indulgence of Anestheta, we might be able to fit it in. But while you think about that, and before we go to our screenshot, which I haven't forgotten, I just wanted to have a couple of reflections from UNCITRAL perspective on what we've heard today. And the first thing that comes to mind is, and Ratana mentioned it, is of course you have the electronic transactions legislation in place, and it's something that is a bit of a silent support in the background. It's been around in many countries, including Samoa and Cambodia, for many years, and it's just taken for granted that the law applies in the digital space. And that really, based on the UNCITRAL model law and electronic commerce back in the mid-1990s, that provides that legal step from traditional law in an offline environment and applying it in an online environment. So that's one takeaway that I have observed. Second is, it's clear that at the same time, law and black letter law is only just one part of the digital transformation. And we've heard about issues about access to IT infrastructure that Charlie very clearly set out in his first presentation. Issues with digital literacy, which we heard from Sutapa and also from Ratana, as well as Ratana also mentioned, the question about the effective administration of the law. And I've been very interested to hear from Eric. Thank you for your own personal experiences. I was wondering how much of restaurateuring can really be provided virtually. I suppose you still need the food, but definitely interesting to see the other aspects of the service delivery that have been made digital and dare I say, fungible tokens. I couldn't think of what I learned about from law school about fungible and butter. And they're legal terms and all related to food. Again, thank you very much for providing those, so that personal experience, and also at the end saying what you think MSMEs would like to hear in terms of understanding digital tools and perhaps what role law can play in providing greater certainty and security for the use of those tools. So I have seen in my ramblings that no one has taken up my offer for a question. So given that our time has just finished, firstly, before thanking you all, I would kindly ask you all to turn your cameras on, which I think I see 1, 2, 3, 4, 5, all panelists are there. So I will hand over quickly to Un to do the countdown, and then I'd like to take the floor again to have a quick word of thanks.
It's all done.
They're all done. Oh, wonderful.
Yes.
Talking about silent support. That's excellent. Well, look, in that case, it only remains for me to thank you once again. In order, I see you on my screen, Sam, Charlie, Ratana, Eric, and Sutapa. Thank you very much. It's been a very dynamic panel, but certainly I thank Eric right at the end, actually, for drawing a few links and commonalities between the different presentations. So with that, I pass you back over to our host, and I hope you enjoy the rest of the second day of this forum. Thank you very much.
Thank you.
Thank you.
Thank you very much, Alex, and all the panelists for sharing their experience and thought. We will now have a short break. We will start the next panel at 5 p.m. Seoul time. During the break, internship promotion video and the slide deck of UNCITRAL resources, including our e-modules and upcoming flagship activities information, will be shown. Please feel free to have a look. Thank you.
It feels as if I have lived for 1,000 years. I am Incheon.
It feels as if I am being born anew every day. I am Incheon. An experience that goes back and forth from the past to the future.
A city of exciting contrast, a city of coexistence. Always Incheon.
Welcome back. We would like to start the Pan 4's discussion of UNCITRAL's new Simplified Insolvency Regime for micro and small businesses. We are very happy to have Ms. Yang Lee, Legal Officer, UNCITRAL, moderate this panel. Yang is a legal officer at UNCITRAL in Vienna. She has serviced UNCITRAL Working Group 5 Insolvency Law and currently services UNCITRAL Working Group 1 on MSMEs. Before joining UNCITRAL, she worked in the field of banking and international arbitration at the Asian Development Bank, Clifford Chance London, and the Permanent Court of Arbitration. I will now pass the floor to Yang. Yang, please.
Thank you, Incheon. Good morning, good afternoon, and good evening, everyone. It is my great honor to moderate panel 4 and to introduce this exciting topic. I will now put the program on the screen so for your convenience, together with the smiley faces of our panel 4 speakers. Some of you may ask, why do you find insolvency exciting? Oh, well, the status of MSE insolvency may be unfortunate, but simplified insolvency regimes are truly exciting. The traditional insolvency proceedings existing in most countries around the world can be very burdensome, rigid, and complex for MSEs. Simplified regimes could provide MSEs with options for an attractive exit or a glorious reorganization. Either way, a fresh start. Several jurisdictions around the world have implemented simplified insolvency regimes for MSEs, such as United States, Australia, Colombia, and in Asia, India, Japan, Myanmar, Singapore, and South Korea. Some regimes are temporary, only put in place to facilitate the reorganization and liquidation of MSEs affected by the COVID-19 crisis. At the international level, several international organizations have also published policy recommendations suggesting the adoption of a simplified insolvency framework for MSEs, including the World Bank and the UNCITRAL. Today, our panel 4 speakers will discuss the topic of MSE insolvency from different perspectives. In the interest of time, my introduction will only cover part of their fascinating work experiences, and more details can be found in the speaker's bio on the UNCITRAL event webpage. Our first speaker is Mr. Harold Fu, an assistant director in the Policy Advisory Division at the Ministry of Law in Singapore. He has been closely involved in the debt restructuring and insolvency policy development and legislative reform, including the Insolvency Restructuring and Dissolution Act in Singapore. Mr. Fu has been a member of the Singapore delegation to UNCITRAL Working Group 5 Insolvency Law since 2017 and was elected chair of Working Group 5 in 2019, leading the deliberations and the finalization of the legislative recommendations on insolvency of micro and small enterprises. He was also elected vice chair of the UNCITRAL Commission at its 54th session in July this year, overseeing the adoption of the legislative recommendations by the Commission. His presentation will focus on the international perspectives on the insolvency of MSEs. I'm delighted to pass the floor to Harold. Harold, the floor is yours.
Thank you and good day to all speakers and attendees. I'm very happy to be here with you today. Thank you for the invitation to be part of this fantastic conference on MSMEs. And like what Yang Ing said, my presentation focuses on the international perspectives in this new area of law that is increasingly gaining widespread attention. So on to the next slide, a broad overview of my presentation. Three broad parts will be covered. First, setting some context as to why MSEs are important, particularly from the insolvency perspective. And second, an overview of UNCITRAL insolvency text such that we can situate this particular legislative recommendations on insolvency of MSEs adopted in July this year within the broader sphere of UNCITRAL insolvency text. And lastly, to give a quick and brief summary of the recommendations that was adopted in July. onto the next slide, the situation is such that we are seeing increasing recognition of the importance of efficient and well-tailored insolvency frameworks for micro and small enterprises. And this is important from at least two perspectives. First, we see that in the life cycle of companies, insolvency plays an important role at the end of the company's life cycle. And I think we have seen that also in the way how this conference is structured, that we go through the different life cycles from the start to access to credit and to the end. And one thing is that the insolvency processes not only ensure that there's maximization and preservation of assets, but at the same time, it also has an upstream impact at access to credit, given the certainty at the end impacts how much lending decisions at the start. So that's the first perspective. And the second perspective is that an efficient insolvency system serves a broader systemic role in seeking to reallocate assets and allow the economy to preserve jobs where possible, productive networks and supply, and yet ameliorate the most negative consequences of bankruptcy. And there are two main facets to the importance of this topic. And the first is that the economic importance of MSEs to global economies cannot be understated. That's the first. And the second, as Yang Ying alluded to in her introduction, that the current insolvency regimes are generally designed for larger enterprises in mind. And with that, we move on to the next slide. This deals with the second point that I mentioned, that existing insolvency systems have generally been designed with the complexities of larger enterprises in mind, and there are a few assumptions in this creation and implementation of such a regime. First, an estate of significant value, the active engagement of creditors, and also a presumption of ownership and management. However, such a system based on these assumptions and characteristics are not suited to the specific characteristics of MSMEs that are financially distressed. And I think that we have heard about some of these features in earlier presentations by other panels. And by no means exhaustive, I will run through a few of these features. The first is closely intermingled personal and business debts without separate legal personality. And this in turn has other implications affecting access to credit being by way of guarantees, and this commingling may result in disincentives to apply for insolvency processes. Second, poor record keeping and lack of financial sophistication means that there are difficulties in navigating the insolvency regimes. And lastly, the low value of business assets to be realized in the insolvency process, because much of this is given to secured creditors in order to secure credit, leads to issues such as creditor apathy and passivity, because usually the amount of assets left over is not enough for the unsecured creditors to take a good dividend. And therefore, with these specific characteristics, that's one side of the coin. And the other side of the coin is addressed in the next slide, which deals with the fact that MSEs have great importance in economies today, and they form not just a critical part of society, but also part of the informal economy. And globally, World Bank estimates that small businesses represent about 90% of businesses, and these represent more than 50% of employment worldwide. In my jurisdiction, Singapore, MSMEs form about 95% of this enterprise landscape. And this is further exacerbated by the impact of the COVID-19 pandemic, where research by IMF staff projects that the share of SMEs with negative equity may rise by 6 percentage points, threatening up to 1 in 10 SME jobs across economies in Europe and the Asia Pacific. And this is projected to put about 20 million jobs at risk. And a few different reasons why SMEs tend to be vastly overrepresented in these harder hit sectors, particularly in the pandemic situation, given that they are more susceptible to this kind of supply and demand shocks, given their labor intensive and contact intensive features, such as retail, food, beverage, and travel industries. And so with this in mind, we turn next to the various international, regional, and national developments that illustrate the importance of an insolvency regime tailored to MSEs. And some of these will be featured by the other distinguished panelists on this panel. And this section focuses on the UNCITRAL legislative recommendations on insolvency of MSEs, which, as Yang Yin mentioned, was adopted this year in July. And alongside this instrument by UNCITRAL, there is also another instrument by the World Bank, and both of these organizations have been designated by the Financial Stability Board as global standard setters for insolvency systems. So this goes to show the increasing importance and awareness of this topic. On the next slide, there will be an overview of the various excellent texts by UNCITRAL in this area of insolvency law. And the recommendations, as you see highlighted in red font, are the latest addition to UNCITRAL's ongoing series of insolvency texts, which include 3 model laws and 4 existing parts of the legislative guide on insolvency law. And these texts, at its core, assist states in formulating modern, fair, and harmonized rules on commercial transactions, and specifically through efficient and effective insolvency frameworks. Like the earlier instruments, the recommendations were the culmination of invaluable contributions by delegates to Working Group 5, and the fruit of this product is a text that is practical and effective, as well as cohesive with UNCITRAL's long-standing practices and earlier texts in the area of insolvency law. Moving to the next slide, we see how the recommendations aim to achieve their goals. And this is through 2 separate processes that are recommended. First, simplified reorganization, and second, simplified liquidation. In terms of modality of implementing this, it may be achieved by either adjusting the standard business insolvency regime or by establishing a separate simplified regime altogether. And this will ultimately depend on the local context and the status and the processes under the existing insolvency regime. That's the first point. And the second point is that domestic policymakers would also have to identify the conditions to access this simplified insolvency regime. And there are a few reasons for this. First, there's no uniform definition of an MSE across jurisdictions. And at the end of the day, it requires a careful consideration of domestic circumstances in order to determine what would best benefit the debtors in that particular jurisdiction. On the next slide, there will be an overview of the key principles and aims of the legislative recommendations. And this guides the comprehensive set of recommendations, which number over 100 recommendations. At its core, it's a balancing exercise, one that policymakers that would be familiar with. First, on one hand, we are trying to provide for simplified and streamlined processes, but on the other hand, we are ensuring appropriate and proportionate safeguards to prevent abuse. And in addition to these objectives, there are also other key elements that guide the recommendations, such as providing for a fresh start, providing effective measures to facilitate participation and address the issues relating to creditor disengagement, over stigmatization, and lastly, preserving employment and investment where possible. And just as a caveat that these recommendations layer on top of the existing objectives of an effective insolvency law, which are provided for in the UNCITRAL legislative guide on insolvency law, some of which would be well known to our attendees and panelists, such as maximization of value of assets and preservation of the insolvency estate. So what these recommendations tailored for smaller enterprises seek to do is to build off those existing foundations that we have in the UNCITRAL legislative guide. The next slide deals with some select innovations and key features of the simplified procedures in the recommendations. They address, so this slide covers 4 particular areas. First, to reduce the cost and length of the procedures. This can be done in a number of ways, through the reduction of formalities for one, and promotion of use of electronic tools and data where practicable, as well as provision of default procedures and treatment that applies unless an affected party objects or intervenes. Second, mechanisms to address creditor disengagement and passivity, and this principally through the use of deemed approval procedures and other similar mechanisms where creditors' lack of silence or lack of a negative vote is considered as acceptance. The third relates to the governance model, which expresses a preference for the debtor in possession model, or the DIP. This is taking into account the specific characteristics of MSEs, such as the simpler nature of businesses, the risk of displacement of management being a disincentive to enter into the procedure, and also potentially the lack of funds to appoint an insolvency representative. And lastly, the recognition of the common instances of the commingling of the personal as well as the business. This is recognized through provision of procedures such as procedural consolidation or coordination of linked proceedings. And this arises, as I earlier mentioned, usually in respect of personal guarantees that are provided in order to finance the business needs of the debtor. So with this, we come to the end of the overview of the UNCITRAL legislative recommendations. And the last slide is just a thank you slide. And I think in conclusion, this is an area of law that is increasingly recognized as an important part for economies. And given the sheer number of MSMEs and also the importance to global economies, and the UNCITRAL recommendations thus seek to provide a set of global principles and best practices that are balanced, practical, and effective for states to consider in studying the various issues, particularly in these times that we are faced with the economic fallout from the COVID-19 pandemic. And with that, I pass the time back to Yang Ying, and thank you again for allowing me to make this presentation.
Thank you very much, Harold. Perfect timing. Many thanks for this interesting and comprehensive overview of the legislative recommendations. It is very timely that these recommendations have been adopted by the Commission in July this year, and we are still now in the middle of the pandemic. And we hope that they will serve as a model for many legislative reforms on MSE insolvency in various regions across the world in the very near future. And with that, thanks. Now I will introduce our second speaker, Ms. Pooja Singha. Ms. Singha is a transactional lawyer based in Singapore for Law LLC with experience of finance and debt restructurings across Asia. She is the Asian Networks Director at the International Women's Insolvency and Restructuring Confederation, IWORC, and also a member of IWORC's UNCITRAL team. She is keenly interested in policy initiatives and has coordinated a response to regulators' call for feedback on a proposed new restructuring and insolvency law. Her presentation today will focus on a practitioner's perspective, Southeast Asia. Pooja, the floor is yours.
Thank you very much, Yan Ying. Right. Hello, everybody. Hopefully you can see my slide up there on the screen. Thank you very much, Yan Ying, for that introduction, and thank you to the UNCITRAL team for this opportunity. For those not in the know, there's just a little slide up there coming up, giving you some information on IWORC. It is pronounced IWORC. It's a little play on what we stand for. We're an international nonprofit focusing on promoting and connecting women in the restructuring and insolvency industry worldwide, in recognition of the unique challenges that women in the industry face. Now, if you're wondering about what the IWORC UNCITRAL team does, let me just provide a little bit more of an explanation. As I'm sure everybody knows, UNCITRAL develops model laws with the help of member nations. However, it is also assisted in these efforts by various non-governmental and quasi-governmental entities, and IWORC is one such entity. And as part of IWORC's UNCITRAL team, I provide the practitioner's perspective, recommendations, and advice and inputs based on my experience as a practitioner in Southeast Asia. So what I do at IWORC is in my volunteer capacity, and my day job is as an international lawyer at Forte Law, as Yan Ying already mentioned. So let's dive into what I'm going to cover in my presentation today. This is a brief overview. So I think we would all agree that UNCITRAL's insolvency framework for MSEs is an excellent base for national governments to craft their own bespoke law for MSE insolvencies. So what I will aim to do in this presentation is to provide some Southeast Asian context on this harmonization initiative. Firstly, by providing an overview of some of the legislative approaches that have already been taken in Southeast Asia. And secondly, providing my own perspectives on what I would jokingly call the good, the bad, and the ugly as regards the landscape for harmonization initiatives in Southeast Asia. And I will then conclude by providing some practical tips using my own experience in the transactional space, in which I've assisted businesses in everything from the incorporation to the funding to the insolvency and restructuring business life cycle on how they can actually manage their insolvency risks outside of the legal framework as well. So with that, let me just jump in. So as iWorks Asia Networks Director, I have the privilege of overseeing 7 networks in Asia. And this has also provided me with an excellent resource to crowdsource some regional perspectives, which I will share with you in the course of this talk. So let me start with a broad brush overview of the legal regime in Southeast Asia in a few select countries. So there are some countries in Southeast Asia which have, for various reasons, not had a bespoke law covering MSE insolvencies. Malaysia and Indonesia fall within this bucket. We also have countries which in recent times have passed a bespoke insolvency and/or debt restructuring framework to deal with business entities that are not large corporates. India and Singapore fall within this bucket, as Yan Ying has already mentioned. So let me provide a little bit of information on the legislative approach taken in Singapore. Obviously, my fellow panelist, Harold, is the expert here as a representative of the Ministry of Law. But let me just provide an overview of some of the changes that have been implemented. So in Singapore, a new law has been passed in the form of a simplified insolvency program, which takes effect from January this year to July next year. Its stated objective is to provide simpler, faster, and lower cost proceedings to assist micro and small companies which want to undertake either a winding up or a restructuring. So there are 2 tracks available under this program, one for restructuring and one for winding up. In order to be eligible, one has to be a Singapore incorporated company with liabilities not exceeding Sing dollar 2 million, with turnover not exceeding Sing dollar 10 million, employees not exceeding 30, and no more than 50 creditors. Now, in many ways, the law is kind of a textbook implementation of several of the UNCITRAL recommendations, and it looks to improve upon the efficiency of process in many ways. So I will just share a few examples to give the audience color on the approach that has been taken. Firstly, the procedures have indeed been simplified as stated. The initiation of the process requires a submission of a simple set of documents on the Ministry of Law's website. There's a set administrative fee, and standard forms have been provided for various filings. Under both programs, there is also a time-bound process for completion of various steps. There is also a move to reduce court processes under both programs. As an example, for winding up, there is no court application required, and the liquidator's functions have also been reduced in scope. I will now turn to India. In India, the pre-packaged insolvency resolution process, or the PPIRP, has been passed for companies classified as micro, small, and medium enterprises under the law. Essentially, a PPIRP involves a pre-pack. That is to say, the MSME has to approach its financial creditors along with a base resolution plan and obtain their approval before formally initiating a PPIRP, which is then a gateway to go into a process which has certain efficiencies which aren't available in the regular mainstream corporate insolvency and debt restructuring process. Again, just to share some highlights of the process efficiencies which are embedded in the law. The process is designed to be speedy. There's several deadlines that are inbuilt into the law. There's also an effort to reduce court processes. The Insolvency Tribunal in India, known as the NCLT, has a limited role in the PPIRP. There are also several other differences. For example, unlike a mainstream insolvency resolution debt restructuring process, this pre-pack framework follows a debtor in possession regime. Again, we can see that several of the themes from the UNCITRAL framework have been adopted and implemented, sought to be implemented within the law. So with that overview, let me then dive into my own practitioner's perspective regarding what really is the landscape for harmonization initiatives in Southeast Asia. I would say that there are some huge positive factors that could help many national lawmakers in Southeast Asia to support the adoption of a bespoke law for MSCs using the UNCITRAL framework as a base. However, I do foresee that there could be several challenges as well. Some of these are general challenges relating to any legal harmonization initiative, and indeed the UNCITRAL deliberations have recognized these already. But there are also some challenges that are unique to Southeast Asia. So what are these factors? So 3 factors that I will cover. The first hugely positive factor is that there has been a recognition of the unique challenges faced by MSEs as a result of the pandemic. There is also an acceptance, in some cases implicit, in other cases explicit, that a bespoke law is required. However, even when national lawmakers are able and willing to prioritize lawmaking for MSEs, there are several complex issues to be considered in relation to the scope of the law. Firstly, a number of Southeast Asian countries have clubbed MSEs and SMEs under a single law, although arguably different policy considerations could apply to both. There is also the very difficult issue of defining MSEs defining what an MSE means within national laws. And indeed, the UNCITRAL framework has already noted that there is no uniform definition. In many countries, MSEs operate without a corporate personality, which creates additional categorization challenges. For example, in India, sole proprietors and partnerships undertake a lot of small businesses. And that is covered under individual bankruptcy law, which is not fully notified and is not covered by the new framework that has been introduced. In Malaysia, we see that the pandemic has had a disproportionately adverse impact on creditors of MSEs who are operating as individual entrepreneurs. This is because the hearing of creditors' petition, because of the technical way that the law is drafted, has to be done physically and cannot be done virtually without the consent of the debtor, which has led to significant delay in such proceedings in several states, particularly those which are still under lockdown. The second aspect I would like to highlight in relation to harmonization is in relation to the recommendation that has been made within the UNCITRAL framework relating to the streamlining of legal processes, and in their own words, encouraging the use of electronic means where possible and where legal to do so. Now, in this respect, we have seen that the challenges of the pandemic have actually speeded up digitalization initiatives with courts, and therefore laid an excellent foundation for having a bespoke law on MSEs in place which follow the UNCITRAL recommendations. As an example, practitioners in Malaysia report that the pandemic has expedited the digitalization of the court system. Cause papers are now e-filed, and a number of cases are, almost all cases are heard virtually. However, there are some national governments which have had to put already overdue digitization initiatives on the back burner, understandably, as they've been overwhelmed with the public health challenges of the pandemic, and they've diverted already scarce policy making resources to extending financial lifelines to businesses. There's also another factor that I'd like to talk about. Now, I think national lawmakers in Southeast Asia are stuck between a rock and a hard place. On the one hand, any form of checks and balances that they seek to introduce in a law requires the involvement of some kind of government body. However, government bodies and particularly courts are choked and subject to procedural delays in a number of countries. Therefore, there is a need for more market-based mechanisms, more consensus-based solutions, but that requires stakeholders to be willing and able to find consensus-based solutions. And historically in Southeast Asia, there has been a great diversity of stakeholders in such debt restructuring and insolvency situations, which has meant that this consensus has been very difficult to formulate in practice. Now, I'm personally hopeful that this will change as we see an increase in adoption of consensus-based mechanisms generally in restructurings and insolvencies in Southeast Asia. Singapore has, as expected, been a trendsetter in this regard. There's a lot of push towards using mediation in insolvencies. And of course, there have been a number of successful pre-packs as well recently. So I will then move to the final bit of my presentation, which is just talking about some practical things that MSEs can do. Now, I deal with a lot of startups, and I think the pattern that I've seen is the same. There are a lot of startups tend to routinely underestimate contracting risks, deprioritize them. There's some very simple, effective legal tools they can use in terms of indemnities, contractual limitations of liabilities, which they fail to deploy. Secondly, startups also tend to be blindsided by legal disputes. Again, they're easy tools that can be used to manage and mitigate one's dispute-related risks, from having clearly drafted deliverables in contracts to choosing an appropriate governing law and jurisdiction in their commercial contracts or even their funding contracts. This can help to mitigate the practical risks of ascertaining what is the applicable law in an insolvency process, which is an issue of great complexity, as has already been acknowledged by UNCITRAL. I will just take 20 seconds to conclude and say that there are also a number of operational risks that startups tend to deprioritize. As an example, cybersecurity. They see this as an operational risk, but this is equally a legal cum financial risk as well, as privacy regulators in Southeast Asia expand the reach of their privacy laws to, among other things, impose huge fines for data breaches. So I'll conclude by saying that assistance for MSCs needs to come through both legal and non-legal tools. Thank you, Yan.
Thank you very much, Pujay, for the overview of legal regime for MSE insolvencies in India and Singapore, and also some practical challenges with harmonization initiatives in Southeast Asia. Also, thanks for sharing the practical ways for MSMEs to manage insolvency risks from a business perspective, and apologies that it was cut short, that part, but very interesting. I'm tempted to read some questions, but I will wait until the end as we still have our third speaker, Professor Min Han. Without undue delay, I'm delighted to invite Professor Han, who is a professor at Hwa Women's University Law School in Seoul, Korea. His area of expertise are insolvency and finance laws. Professor Han has been a member of the Korean delegation to UNCITRAL Working Group 5 Insolvency Law since 2010, so more than a decade ago now. He is currently the chair of the special committee organized by the Ministry of Justice of Korea for amendment of Korean insolvency law. His presentation will focus on simplified rehabilitation proceedings for MSEs in the Republic of Korea. Professor Han, now the floor is yours.
Thank you, Yanning, for introduction. My presentation will cover simplified rehabilitation proceedings for MSEs in the Republic of Korea. It is a great pleasure and honor for me to give a presentation on this subject in the context of UNCITRAL legislative recommendation for MSE insolvency regime. My presentation consists of 4 parts: court supervised insolvency proceedings in Korea, individual rehabilitation proceedings, summary rehabilitation proceedings for MSEs, and finally efforts for improvement. As you see in the slide, we have 4 types of insolvency proceedings: rehabilitation proceedings, individual rehabilitation proceedings available to individuals owning business income or salary income, and bankruptcy proceeding, which is insolvency liquidation of all types of debtors, and cross-border insolvency, which enacted UNCITRAL model law of 1997 on cross-border insolvency. In the rehabilitation proceeding, we have 2 proceedings. One is general rehabilitation proceeding for all types of debtors, and the other one is summary rehabilitation proceeding, specifically designed for micro and small enterprises. And this summary rehabilitation proceeding we introduced in July 2015. So now it's about 6 years since we newly introduced summary rehabilitation proceeding. On the other hand, this individual rehabilitation proceeding, we introduced this in 2004, and both of these summary rehabilitation proceeding and individual rehabilitation proceeding may be categorized as simplified rehabilitation proceedings for MSEs. The basic structure of each insolvency proceeding may be summarized as set forth in this table. Let's see the summary rehabilitation proceeding for MSEs. These proceedings are available to small business debtors, whether they are corporations or individuals, but the maximum debt owed by such debtors must be 5 billion Korean won which is approximately 4.3 million US dollars or less. So I'd like to note that this amount was increased from 3 billion Korean won last year at the beginning of COVID-19 pandemic. These proceedings, the basic features of this proceeding are same as the rehabilitation proceeding. So all kinds of claims, pre-commencement claims are subject to these proceedings, and the maximum repayment period will be up to 10 years, and creditors voting on the plan is required, and discharge of pre-commencement debt becomes effective upon court's approval of the plan. On the other hand, individual rehabilitation proceeding, these proceedings are available individuals earning business income or salary income, and who has relatively small amount of debt, that the maximum secured debt, the amount is limited to approximately US dollar 1.3 million, and unsecured claim amount is limited approximately US dollar 0.86 million. Each such amount was increased this year by amendment of the law. And these individual rehabilitation proceedings are available to only such small the individuals, and only unsecured claims covered by these proceedings. And the repayment period in principle is limited to 3 years, and no creditor voting is required. And actually, this proceeding is similar to Chapter 13 of US Bankruptcy Code, and discharge will be available upon, in principle, upon full payment of the payment under the plan. The detailed procedures of individual rehabilitation proceedings are described in this chart. I will omit the explanation of this. I'd like to note that voting on the plan is not required, and in principle, the discharge of pre-commencement debt is available in principle after completion of payment under the plan, and the maximum repayment period is no longer than 3 years in principle. On average, according to recent statistics, it appears that the average period from the petition to court's approval of the plan is about 9 to 10 months. The summary rehabilitation proceedings for MSE, we amended our insolvency law effective from July 1st, 2015. And at that time, we had the pre-existing challenges for MSEs pursuing rehabilitation because the individual rehabilitation proceedings, which were available only to individuals having a relatively small amount of debt. And such simplified proceedings were not available to corporate debtors, the corporate MSE debtors. And also using the general rehabilitation proceeding, because of the heavier procedures and cost, the procedures were burdensome. So we tried to introduce simplified, low cost and fast procedures for MSEs, and increase the availability by including all types of MSEs and increasing the maximum debt amount for eligibility. The special features of summary rehabilitation proceedings may be summarized as follows. The eligible debtors I have already explained, and no record of having obtained discharge within the past 5 years to prevent the excessive abuse of the proceeding, and only the debtor is entitled to file a petition, and a case filed by an ineligible debtor is not refused or rejected. Instead, it may be converted to a general rehabilitation proceeding. And this proceeding is in principle applies debtor in possession structure, and in principle a trustee is not appointed, and no creditors committee is organized, and the examination procedures regarding the business and property of the debtor is simplified by simplifying the procedures, and particularly simplifying the contents of the examiner's report, which is submitted to the court during the proceedings. And the requirements for creditors approved of plan, particularly with respect to the unsecured claims, was relaxed a little bit. Still, the court and also the court has crammed down power to approve the plan, although there is no approval of the creditors. The detailed procedures of the summary rehabilitation proceedings may be summarized as follows, and I'd like to omit the explanation of these detailed procedures, but I'd like to note that these proceedings require voting on the plan, and the discharge will be effective upon court's confirmation of the plan. So discharge is given relatively earlier compared with individual rehabilitation proceeding. In these fast track procedures, it's very relatively very fast procedure from the petition until the court confirmation. It takes about 100 days, but in practice recently, on average, it takes about 6 months from petition to court's approval in this summary rehabilitation proceeding. Finally, I'd like to address the efforts for improvement. In practice, the Seoul Bankruptcy Court practice, the Seoul Bankruptcy Court, a special bankruptcy court, which was newly established in March 2017, the court developed some practice. The first one is parallel conduct of individual rehabilitation cases. The individual rehabilitation cases for owners, managers of a corporate MSE are assigned to the responsible judge of the panel, which is in charge of the summary rehabilitation proceeding for such MSE. So the court, although there is no legislative support at the moment, the court in practice assigned the cases to the same judge to address the corporate MSE as well as its owner and manager. And the simplified examination of debtors, business, and property, the court introduced a standard form of the examiner's report and also encourages streamlined examination method for summary rehabilitation proceeding. And recently, the court, in response to the COVID-19 pandemic, since March 2020, Seoul Bankruptcy Court has been conducting virtual court hearings using video calls, in particular for summary rehabilitation proceedings. The evaluation of past 6 years, summary rehabilitation proceedings are streamlined, fast, and low-cost procedures, and in my view, are functioning very well for reorganization of MSE in financial distress and are being used extensively in practice. In the case of corporation, about 40% of entire rehabilitation case are summary rehabilitation proceeding. In the case of individual MSE, about 30% of entire rehabilitation case, excluding the individual rehabilitation proceeding, about 30% is individual MSE cases. So further improvement by legislation required. So various improvements to Korean insolvency law have been under deliberation by a special committee organized by Ministry of Justice of Korea. I think we need to accommodate the recommendations in the UNCITRAL legislative guide on insolvency law for MSE, including, among others, as Mr. Harold Fu explain the adoption of deemed approval in order to address the creditors' disinterest. The silent the creditors would need to be deemed to have approved the plan. And also legislative support for joint administration of summary rehabilitation proceeding and rehabilitation proceeding for the owner and manager other individuals who provided personal guarantee may be desirable. So actually some other issues may also need to be considered, but I think this is what I wanted to cover. Thank you.
Thank you very much, Professor Han. And I'm very happy that we are very well on time. And for Professor Han's presentation, personally, I'm very interested to learn about this Korean summary rehabilitation proceedings, which has been put in place in the past 6 years, which also means that there is a very sound legal framework in place in Korea to help MSMEs to navigate the storm during this COVID crisis. And we have actually a few minutes left for some Q&A. If I could kickstart off by asking one question where we gathered from someone through the registration form. In the registration form, it mentions unfinanced bankrupt MSMEs, which I understand it could actually translate into, in the insolvency context, what we call the business rescue finance, which is, of course, an issue to the heart of any MSMEs, not only at the financial distress stage, but throughout. We have heard yesterday the panel on access to credit, and this morning in the digital panel, we also heard some elements how to access digital loans. So if I may just pose this question for business rescue finance to the speakers, whether all of you or any of you would like to take up this question.
Hi, Yang Ying. I can take it up, and the rest can chime in if they would like to. I think coming from the perspective of an insolvency practitioner, rescue finance in distress situations is slightly different from the other contexts which you are speaking about. And here, the principle is that you are giving financing when the company is financially distressed in order to provide liquidity while the company is trying to rehabilitate itself or to remedy a breach or a default in certain underlying contracts. So the underlying thinking is that the rescue financing in certain cases can provide working funds or preserve assets while the company tries to restructure successfully. And all of this is with the view to avoid the value destructive processes of liquidation. And like what you mentioned, I think hopefully a glorious reorganization. And this issue was debated quite substantially in the working group. And I think both of the panelists would recall this, that there are 3 situations in which rescue finance can be granted. First is even before the commencement of formal insolvency proceedings. So when it's in the zone of insolvency, but formal proceedings have not begun, that's the first. And the second relates to rescue financing after the proceedings have been opened. And we see this feature quite a fair bit in insolvency systems. And the last is for exit financing, which is once the company has gone through successfully the restructuring process and it's on a good footing, how do we place its financials on a firm footing in terms of financing? And the recommendations that UNCITRAL has worked on address the first 2 types of financing quite comprehensively. And all of this, as you can tell with the recommendations, are aimed to be a balanced instrument. So on the one hand, ensuring the finance is appropriate, but on the other hand, ensuring that the existing creditors are not unduly prejudiced. So I think just a broad overview of my perspective on this, and the other 2 can feel free to add on as well.
Hi, Anya. I would just add one observation, which is that I think in general, I think in Southeast Asia, there hasn't really been sort of a market for rescue financing, to the extent there is in the West. And that goes to some of the kind of cultural considerations that I alluded to. There's just a lot of disconnect between stakeholder expectations, particularly, incumbent management who tend to be majority owners of the business, as against a diverse pool of debt holders. as against the incoming rescue financier, whatever stage of the proceeding it might be coming in. So I think, again, no matter what the legislative tool we introduce, I think we just have to be mindful of this background context as well.
Thank you very much, Harold and Pooja. Professor Han, would you like to add anything? In the meantime, I will...
Okay, I'd like to just the situation in Korea. The rescue financing which is provided during insolvency proceeding, at least under the law, we give priority to the lenders who provided financing after the petition and after the commencement. However, in practice, such rescue financing, it appears that it's not readily given because of some reasons. For instance, the banks and other financial institutions need to record their claim as some kind of bad debt and accumulated some money. And however, the exit financing is frequently and is well used in practice. I think a more important thing in the case of MSE is how to maintain the control of the former or the existing the owner is very important. In the case of MSEs, having the same the owner and using the expertise and relationship that owner has is very important. So how to recover or how to incentivize the owner to maintain the MSE, that is also important, as well as the availability of rescue financing. Thank you.
Thank you very much. Now I would like to take this opportunity to thank all of you for the excellent presentations. And let's not forget that we will take a group photo together. My colleague Incheon will gladly help us. Please smile and say MSEs.
Professor Minhan, can you please see the camera? Okay, thank you.
Smile, MSEs.
Okay, thank you very much. It's all done.
Thank you very much. And just to for the audience, I've shared a link to the advanced copy of the UNCITRAL report of the 54th session. You will find the legislative recommendations in Annex 2. Thank you all and enjoy the rest of the panel discussion.
Thank you, Yang Ying.
Thank you.
I will hand the floor over to my colleague Incheon.
Thanks to Yang Ying and all the speakers for the excellent discussion. We will now have a short break. During the break, I would like to announce that there will be a technical check with the panel 5 speakers. So please turn on their cameras on to check your connection, and I would like to seek the kind understanding for the participant. We will resume the session at 6 p.m. for panel 5. Thank you. Welcome back to our last panel of the forum. Panel 5 will discuss resolving disputes involving MSMEs. It's my great pleasure to introduce the moderator of panel 5, Mr. Jae-Sung Lee, Legal Officer at UNCITRAL in Vienna. Jay is the secretary of UNCITRAL Working Group 2 on dispute settlement and also services Working Group 3 on investor state dispute settlement reform. He has also serviced the working groups on electronic commerce and secured transactions as secretary. In addition, he undertakes a number of technical assistance and coordination activity in the relevant areas and was heavily involved in the establishment of UNCITRAL RCAP in Korea. May I now invite Jay to commence panel 5?
Thank you, and I hope you can hear me, and good day to everybody. Welcome to the last panel of the Incheon Law and Business Forum to discuss the resolution of disputes involving MSMEs, taking from a MSME perspective. Like any other business, MSMEs, as they engage in international trade or any kind of transactions, will inevitably face disputes. These may be with other MSMEs, or maybe with an important customer, for example, a large company to which the MSME provides services or goods, or a customer or consumer who may be raising claims based on consumer protection rights. The amount of the claim may also vary. Sometimes the amount determines the fate of the MSMEs. So taking the theme of this ILBF, it could be a shower for the MSMEs, could be a storm or even a hurricane, because depending on the claim, it could actually result in the insolvency of the MSME. So this panel will look at how MSMEs view disputes, how they solve them, ADR services provided by arbitral institutions, and developments at UNCITRAL, which may have a positive impact on the resolution of disputes that involve MSMEs. So the first presentations would be Maggie, followed by Sue and Sarah and Takashi. Please refer to the speaker bios on the website for these notable speakers that we have and all the career experiences that they are able to share with you. So with that, I give the floor to Maggie for her 8-minute presentations to be followed up with Q&A afterwards. Thank you. Maggie, go ahead.
Thank you. Let me share my screen. Good day. Well, thank you for having me. I will talk about value-added resolution approaches for MSMEs in China. Seems to have some technical problems. Sorry for that. Let's try again. Okay. First, let's take an overview of MSEs in China. Under the impact of COVID-19, there are 25 million new companies registered in China in 2020, among which 60% are MSEs. Although the economy is hitting hard by the COVID-19 crisis, there are silver linings in the dark clouds. Let us take a look at the growth areas. The number one growth area is online takeaway business. This business has supported many retailers during the crisis so they can remain open. The number two growth market is online office market, which keeps professionals connected when people cannot commute. The number three growth market is online medical market. More money and talents are entering into this market to seek opportunity with a silver-head economy. Behind every growth market, there is strong, reliable information infrastructure, which allows an MSE owner to start business anywhere, regardless whether he or she is in a rural area or in a fourth or fifth tier city. He or she could have reliable, cheap, high-speed Wi-Fi or internet access. In my opinion, information infrastructure is vital in the transformation from the traditional economy to digital economy. There's a recent joke. When times are good, many MSE owners regularly donate to temples. And in the recent crisis, such a donation decreased significantly. The monk in a famous temple had asked his team to review the donation history so they could return the donations to those owners so as to help them to go through this challenging period. It is said that a famous food instant delivery company received angel investment from a fund that was established through the return of the donation by the owners. Well, when economies are bad, disputes can be everywhere. It could be a shower, it could be a thunderstorm, it could be a hurricane. In China, business people prefer to talk among themselves. It's a less litigious culture. Only when such efforts failed, the parties will refer their case to a third party. Dispute resolution is a painful process that involves collecting evidence, preparing pleading or defense documents. A lawsuit or arbitration case is often a compulsory disclosure item to shareholders. Then the question is how to add value to MSMEs in the painful process. There are 3 dispute resolution methods in China, being litigation, arbitration, and mediation. When deciding which method to go to, let's examine the fundamental interests of the parties. For business people, there are 3 fundamental interests: money, time, and people. Money is business. The first thing goes to mind is the cost of the dispute resolution method. The litigation and arbitration will charge a percentage of dispute amount. Mediation is like, it could be free or just reduce the cost. For business people, time is money. Litigation needs to go through 2 trial proceedings. But while with arbitration, the party can solve a case within 6 months or even quicker. With mediation, it's up to the parties to allocate time so they could solve their dispute. Dispute reflect characteristics of the management. For every litigation case, it will become a public record. With arbitration or mediation, those history won't be available to the public unless disclosed by the parties. Often a dispute involves value discussions, which is who is guilty and who is innocent in the process. PR battles were often involved. The parties will also use all means, including criminal complaints, administrative complaints, or whistleblowers, which will greatly disturb ordinary business operations. So it's important to find ways to address value issue in the process. Mediation negotiations are very helpful because it offered enhanced communications through broadened discussion scope. It can also reveal people's emotional distress. I want to share a case study. Plaintiff filed a series of lawsuits in 2 countries on the ground of IPR infringement. Defendant responded by filing a 1-year lawsuit in country E. Both parties issued PR statements regularly, which troubled investors, employees, suppliers, and customers. And because common law system and continental law system have different evidence rules, the case outlooks are different for disputes of similar facts. Because the case involves IPR infringement, it invokes value judgment, which significantly impacts the future fundraising activities because no one wants to invest in bad companies. It was extremely challenging to raise capital, and also given the damages claimed exceeded $400 million. It's extremely expensive. The CEO of both companies used to be close, but the relationship burned in the litigation process. The parties are extremely hostile in discovery process. The discovery rules in country B involve submitting certain sensitive data, which triggers data compliance issue in country C. The parties try to solve issues between themselves but failed. So there are pressures from investors to seek mediation from a third party. Luckily, the parties found a young mediator who's not a legal professional. He is influential on both parties. He's a good listener. He listened to the story of both sides. He's holistic and logical. He can always remind people of their fundamental interest when people are lost in details. He's very skillful in dealing with value questions. As a result of his effective work, the CEO of the defendant company is saved from being labeled as theft of trade secrets. The plaintiff company has saved the trouble of going through the lengthy legal process and quickly grows into a top-tier autonomous driving company in China. I try to list the differences among 3 dispute resolution methods. In order to add value to business, I think the requirement for the team is to achieve business goals in the most cost-efficient way. So a lot of times we need to use a combination of 2 or even 3 methods to achieve business goals. So in the interest of time, I won't go into details, but by conclusion, I want to thank this forum for convening on this topic. I think this session brings global and national attention to the recovery of MSMEs. With insights, resources, and attention, it's easier for MSMEs to recover from the crisis. And thank you for listening. That's all from me.
Thank you, Maggie. I think you pointed out the 3 elements that the MSMEs actually need to look at when they need to resolve disputes, which is time, cost, and the human resources that are required to resolve those disputes. So let's turn over to KCAB and KCAB International. Sue, what kind of services do you provide for MSMEs, and what are the characteristics of the services that you provide? Sue, you have the floor. First, unmute yourself, Sue.
Thank you. First things first, I should unmute myself. Oh, anyways, thank you. Thank you for having me as part of the Incheon Law and Business Forum. I thank the organizers for inviting me. My 8-minute presentation will be to introduce how KCAB has been and is continuing to assist small and medium-sized companies in disputes related to their commercial dealings. KCAB's mission, which is to provide a neutral and reliable forum to resolve disputes, includes a semi-public function of promoting and improving the arbitration system itself. And a key pillar to this function is to provide sufficient assistance and information to small and medium-sized companies so that they can make the best use of the system. This public function has its roots since the beginning of KCAB. To introduce a little bit of how KCAB was formed and what type of mission it was mandated with, KCAB was established in 1966, many years ago, which happens to be the same year as the enactment of the Korean arbitration law. So the history of arbitration in Korea actually goes at the same time with the history of KCAB. The impetus of the enactment of this statute, the arbitration law, and the establishment of KCAB as an institution goes further back to the 1960s, early 1960s, when the government first implemented the 5-year economic development plan, which was an export-driven national economy plan. Through this 5-year plan, the volume of exports from Korea to the rest of the world increased. But as a result, so did the number of trade claims, usually by the foreign buyers against the Korean manufacturers. Because there was no properly functioning system to resolve these grievances, foreign buyers of Korean goods had then, in the 60s, turned to the Korean embassies stationed in their hometowns to file their trade complaints. And through this alerted the Korean government to the need of establishing a reliable and workable dispute resolution legal framework. This led to the enactment of the Korean arbitration law in 1966 and also to the establishment of KCAB, which was set up as the sole arbitral institution in Korea and still remains so to this day. The main purpose at that time was to provide a reliable and neutral dispute resolution mechanism for trade claims, most of them which involved small manufacture of goods that were exported. While throughout the years and decades, KCAB has grown in size and expanded its scope of cases and has gained experience in dealing with more high-value, complex international disputes. The assistance and support to these small trade claims still continues, and many services still remain true to the original beginnings of KCAB. KCAB is a nonprofit organization Financial self-sustenance through collection of administration fees, of course, are important, but providing public function is a fundamental mission. There are various public functions of an institution, such as the providing of education, but here I refer to an institution's service of assisting and supporting the users of arbitration, which often are small companies with small claims. The frequency of solved claims at KCAB can be confirmed in its caseload throughout the years. Just as a recent example, in 2020, almost 40% of the claims had a claim value of less than 500 million Korean won, which translates roughly to 450,000 US dollars. And this is a threshold of cases that apply expedited procedure, which is an indicator of a small claim. From administering these cases of small and medium companies, we have been able to see a pattern of difficulties faced by these companies who are conducting international arbitration. Most of these difficulties relate to language differences, especially since often in international disputes, English is used as the procedural language, and due to neutrality, many of the arbitrators are of third nationality. But also, it is also due to the lack of preparedness of these small and medium companies who lack the awareness of needing to keep careful record keeping of their complaints. And of course, the difficulty of having to meet the costs of seeking professional services, which oftentimes is essential to properly presenting or defending a case. Despite all these difficulties, KCAB has continued with the public function of providing assistance of supporting small and medium-sized companies. Of course, we will not be able to intervene with the contents of how they present their case or defend their case, but as an example, there is a program of waiver of application fees and application of the minimal range of administration fees when so as to alleviate the cost burden that these small and medium-sized companies may feel. There is also an expedited procedure regime under Articles 43 to 49 of the KCAB international rules, which lead to a quicker resolution of the procedure, and the tribunal is allowed to provide an award in summary form as opposed to a long form. Just as there are very small claims in the caseload, there are also very large claims, very complex case in international arbitration. KCAB, as most institutions, face the need to be everything for everyone. They need to serve not only the large cases, but also the small cases. At the same time, there is also a need for financial self-sustenance. And of course, this is sometimes comes to odd with the need to continue with the public function. The good thing, I think, of KCAB and of the Korean arbitration community is that we have a very large pool of strong and dedicated professionals that provide, that are the potential pools of arbitrators, especially young and diverse arbitrators are ready to provide a very high quality and very neutral resolution to a dispute, which is, of course, very important to providing a proper dispute resolution. The Secretary of the KCAB also provides very hands-on support to these small and medium companies so that they will be able to make best use of arbitral proceedings. I know I am very close to, or perhaps over my 8 minutes presentation, so I will be happy to let the other presenters speak about their experience with small and medium-sized companies and perhaps chime in through the discussions that will ensue after the presentation. So that's all from me for now, and thank you for listening.
Thank you, Sue. I think while we've been focusing on ADR of use of arbitration and mediations, we must not forget that courts have also in place a small claims tribunals. Some of the jurisdictions have introduced small claims tribunals, which MSMEs can use to resolve disputes that are under a certain amount. So I think we also have to take that into the picture. But let's go to Hong Kong and hear from Sarah on the services that are provided by HKIAC. Sarah, you have the floor.
Thank you very much, Jay. I'll just unmute myself. I just wanted to say thank you to Maggie and Sue. I found your presentations really interesting, and I think some of what I say will resonate with what you've said already. At the Hong Kong International Arbitration Centre, I just want to give a quick snapshot of the institution and then move into some of the specific aspects of our work that are really relevant to MSMEs. So we were founded in 1985, and we've administered approximately 11,000 cases to date of varying sizes. We've been ranked in a recent important international arbitration survey as one of the top 3 arbitral institutions globally. We are independent and non-profit like KCAB, and we have a public service element. And importantly, we are a one-stop shop. So we provide arbitration services. That's our main work, but we also appoint mediators, adjudicators, and we work in the realm of domain name disputes. We also have a full-fledged hearing premises, and we may come on to that a bit later because there are a lot of costs associated with running hearings. We have our headquarters in Hong Kong. We have an office in Seoul and in Shanghai. I think that that's important because users in those jurisdictions know that there is an office on the ground where they can go to for information. And you can receive information in your mother tongue, and that's important in some cases. So as Sue alluded to, institutions like KCAB and HKIAC service a whole range of disputes, small disputes of $100,000 or less through to large disputes of $1.5 billion and up, and everything in between. And our services need to be relevant to all kinds of disputes. At the HKIAC, we have seen an increasing number of disputes over the last 5 years that are under $1 million, and you see there the graph. So that represents an important proportion of our cases. And that's where we will find most of the MSMEs in their claims. Not to say that there are only small disputes for MSMEs, because there are some smaller companies that have very large disputes. But we see an important proportion on our cases. And so what do we consider to be important for smaller businesses when they're coming to dispute resolution? Well, of course, you, as a small business, you're obviously preoccupied with cost, with duration, and as Jay mentioned, the time resources, the labor that's required for pursuing a dispute. And I lump that in with costs, if we can quantify in some way the time that's required, and the fact that you're dedicating attention away from your business and putting it into a litigation or arbitration. And so essentially a small business needs to think about its litigation or arbitration as an investment. Is it going to make a return from this investment? Is it worth it? Is it worth the time? Is it worth the money? And if it's not, they really seriously need to consider whether it's even worth pursuing. As part of that equation, it's very important also to understand whether or not enforcement of a successful award will be achievable. And if there is a serious risk there, again, it is time to reflect and perhaps think about other processes like mediation, because there can be a serious cost difference. Also, the process needs to be efficient. So that's not to say that every arbitration must be resolved in 6 months, because not every case, many cases need much longer, but rather that there is no time or cost wasted. Okay, so that's how we've thought about some of the services we provide. So what is it that you would find at HKIAC when you're trying to save time and costs? Well, one of the unique features we have is that the parties can decide how they pay their tribunal. At certain institutions, you will pay your tribunal according to the amount in dispute. At others, you will pay your tribunal according to an hourly rate. At HKIAC, there is a choice, and the hourly rate is capped. The choice is important because, for example, if you have a simple case, but the amount in dispute is high, then you will want to go by hourly rate because then you only pay for the work done rather than the fees generated by the high amount in dispute. And the converse is also true. If you have a low amount in dispute, then you'll want to go with a fee scale that is according to the amount in dispute. There is a cap on the hourly rate, and also at the Secretariat at HKIAC, we work literally on a daily basis with arbitrators to make sure that their hourly rate is commensurate with the size of the case. And when we are appointing, we make sure that we're appointing someone who's charging an appropriate hourly rate. That's a very important part of our work. Time-saving measures, there are quite a few, but I just want to point out these three. The first is that there's a time limit on the issuance of the award, and so in our general arbitrations. So once the hearings and the pleadings phase has finished, the tribunal must close the proceedings and at that time announce the estimated time the award will be issued, and that must be within 3 months. We also have an expedited procedure, so a fast track procedure, which is designed for smaller cases. In our cases, that includes cases under 25 million Hong Kong dollars, which is approximately $3 million US. And I'll come on to this expedited procedure a bit more. We also have an early determination procedure. So if you as a small company are on the wrong end of a lawsuit, and you think that the point of fact or law the other side is raising is completely without merit, you can ask for it to be decided early and discreetly. And if that is dispositive of the claim, you will avoid a lot of time and costs. The expedited proceedings, this is really a very popular provision in our rules. And here you see an increasing number of cases over the last 6 years on our docket. Let me just skip to this slide. The expedited procedure can be applied for by parties before the tribunal is constituted, and according to 3 criterion. The first is that the amount in dispute is less than $3 million US approximately, or the parties agree, or where there is exceptional urgency. The vast majority of our cases come under criterion 1, so it's the size of the case. Very few cases come under criterion 2, although there are some, and often they are agreed in the arbitration agreement. And we have had 1 case that has been put into expedition under exceptional urgency. That is quite a high threshold, that last one. We have gathered data across all of our expedited procedure cases that culminated in a final award. We have not counted those cases that settled early by consent award or by early termination, but only those that went all the way to a contested award, 44 cases. We included all periods of stay, and the median time taken by the tribunal to issue the award from receiving the file was 5.8 months, and the total duration of the arbitration was just under 9 months, and the costs of the tribunal's fees and HKIAC's fees was $24,000 US. Now, these are figures that are averaged out across 44 different cases of various sizes, but under a certain limit. So you have to, it's not an exact science, but it gives you a sense of what you're looking at. In the expedited procedures, there are certain features that mean it is going to move faster and it's going to be cheaper. You have 1 arbitrator unless the parties have agreed for more. There will be no hearing, that's the default, unless the tribunal considers there should be. There will be 1 round of pleadings after your initial notice and answer, and the award will be issued in 6 months. And we've seen this process work very successfully. I now just want to walk through a couple of other features at HKIAC that I think are effective in leveling the playing field, especially if you're a small company and you're in a lawsuit with a much larger company or a much more solvent company, or and and to protect against some of the things that we see parties do, typically as respondents, to make proceedings harder than they need to be. The first is that sometimes you'll find that a respondent party will refuse to pay the deposit needed to pay the arbitrated tribunal's fees. And that means the claimant has to bear the whole cost for the whole case. What we introduced was express provisions to make it that you could apply for an award to get reimbursed that payment while the arbitration is ongoing. And what that means for a small business is you can get title to that amount of money and you can enforce it while the case is ongoing, and you don't have to provide all of the money for, it could be a significant period of time. Secondly, we have another provision which means that the tribunal can issue costs, awards and orders throughout the proceedings. And what I mean by that is the tribunal can sanction the conduct of an obstructive party during the proceedings. And when a tribunal does that with cost sanctions, that can be a powerful tool to discourage a party from trying to obstruct proceedings. The other tool that's available in Hong Kong and some jurisdictions in Asia and around the world is third-party funding. That's lawful in Hong Kong. And what that is that a third party that has no interest in the dispute will fund typically the claimant in its claim in exchange for some of the return once the award is issued and enforced. So the third-party funder will fund everything and then take some of the money at the end. We have provisions in our rules that cater for that situation and make sure that there are no conflicts of interest arising because of the role of the third-party funder. But that's very interesting for a smaller party that can't fund its own arbitration. Okay, also the use of technology. We have seen this become so important over the time of the pandemic in all of the jurisdictions that we're in. And at HKIAC, we have spent the last 18 months providing services for virtual hearings. And what that means effectively is that the costs that were typically, in a traditional arbitration, there is a real cluster of costs around hearings, flights, hearing venues, hotel bookings, etc. But with the advent of virtual hearings, which work very effectively, a lot of those costs have fallen away. So that is good news for smaller companies. Also, we offer an online case platform where all of the documents and information in a case and the calendar in a case are centralized and online. And that's also a cost saver because it means you don't have to spend money sending all of your documents by courier all around the world. Also, in our rules, we have an explicit provision in our rules that mandates that the tribunal must take into account the use of technology to save costs. Okay, I just want to end. I've got 2 more slides. The next 2 slides, I want to focus on enforcement. So it is very important for parties, as I said at the beginning, you have to be able to enforce your award. Otherwise, the whole process is not worth your time. In fact, it's a cost. In Hong Kong, we are a party to the New York Convention, which means that awards coming out of Hong Kong are enforceable all around the world. HKIAC, we also administer cases that are seated in other jurisdictions, not just Hong Kong. The Hong Kong courts themselves have a very high level of enforcement. It's very difficult to resist enforcement in Hong Kong. And as between Hong Kong and China, there is a special arrangement, which means that enforcement between the 2 jurisdictions is effective. But one of the very important developments that I want to raise to your attention, and for those businesses who are online and who are involved in contracts with parties in mainland China, whether they are Chinese parties or foreign parties operating in mainland China, there is a new instrument which is very important, and that is relevant to arbitrations that are seated in Hong Kong and administered by HKIAC as well as a handful of other institutions. Under this arrangement, you can access the mainland Chinese courts directly for interim relief. And what I mean by that is you can obtain from a mainland Chinese court a freezing order over the assets of the counterparty in your dispute, for example, a freeze on a bank account, and that will secure the assets against which you are trying to enforce your award eventually. Now, you can only do that if you seat it in Hong Kong and you have it administered by HKIAC or one of the other institutions in Hong Kong. This arrangement has been in place now for almost 2 years, and we have a role under the arrangement, and we have seen 50 applications made, and those applications, many have been successful. And we know of 30 court orders, which have in total issued preservation orders covering $1.5 billion worth of assets. So that is something that is commercially significant for parties. If you have, if you need to enforce your award against assets on the mainland, again, whether they're owned by mainland Chinese or by foreign parties, you can also obtain injunctions with respect to conduct and evidence. So I wanted to bring that to your attention. Thank you very much.
Thank you, Sarah. You have mentioned and referred to expedited arbitrations, which has been now kind of came into fashion in the arbitration industry. I think I'll pose the questions to Sue later on how KCAB conducts their expedited procedures, and also on how you said that HKIAC provides a level playing grounds for MSMEs, also how KCAB provides similar measures for SMEs. Now, going into expedited arbitrations, based on the cost that we need to also address the cost and time of arbitrations under the UNCITRAL arbitration rules, the UNCITRAL's working group 2 has worked on the preparation of the expedited arbitration rules, which now has been adopted by the Commission and will enter into force in 7 days, I think. So with that, I give the floor to Takashi to give his presentations on the UNCITRAL's work on expedited arbitrations. Takashi performed the role of the rapporteur of working group 2. Takashi, you have the floor.
Thanks, Jay. I'd like to begin by thanking the co-organizers, UNCITRAL, the Korean Ministry of Justice, and the city of Incheon for this opportunity to speak. In the time allotted as the rapporteur and the representative for Japan for Working Group 2, it is my great pleasure and honor to give my brief presentation entitled Fast Track Arbitration for Agile Businesses. Let me put my slides on the screen. So here we go. As you see in the subtitle, my presentation will mainly focus on the UNCITRAL arbitration rules, expedited arbitration rules, which was adopted during UNCITRAL session in July this year, as Jay mentioned. By way of background, in the slide, I have listed some relevant points to look at before going into the details of the expedited rules. Starting with the first point, there is probably no disagreement that businesses should generally concentrate energy on profitable and forward-looking activities and not dedicate time and resources to settling disputes, which Maggie correctly characterized as being painful. This is especially so for MSMEs, the backbone of economies. As we are in these times of rapid change, there is a growing demand for quick and affordable dispute settlement mechanisms. This is not limited to arbitration and mediation, but also including court proceedings and other forms of dispute resolution. So that arbitration continues to be an attractive option. Concerns about rising costs, undue formality, and lengthier timelines need to be addressed. To address such concerns, to the extent of my knowledge, arbitral institutions have also set forth its own expedited rules. And against this backdrop, and recognizing the need for a common set of rules for expedited arbitration, in February 2019, UNCITRAL Working Group 2 started work on expedited arbitration, and following discussions at 5 working group sessions, in July 2021, UNCITRAL adopted the UNCITRAL expedited arbitration rules as an appendix to the UNCITRAL regular rules. I now turn to the next slide. Let us now take a look at the key features, specifically the basic rules of the expedited arbitration rules. Under the expedited rules, one of the most important features is that the award will be rendered within 6 months from the constitution of the tribunal. I hear that for some sectors, the 6 months is still too long. But I nonetheless think it is worth stressing that under the EAR, it is no longer the years that were needed in concluding an arbitral proceeding. In order to ensure that an award will be rendered within 6 months, quite obviously appropriate means will also be required to be put in place. Important features in the expedited arbitration rules include the following. The arbitral proceeding under the EAR will be conducted by a sole arbitrator. It's not hard to imagine that when you have multiple arbitrators, extra time is obviously required for coordination. The provisions in the EAR, which enable swift exchanges, also play a role in expediting the process. I won't go into too much detail, but if you look at the rules, you'll see the 15-day time periods all over the place. Swift and effective communication is also key. The tribunals are required to consult with parties within 15 days from its constitution. The tribunals will make use of the best available means, including by holding case management conferences. Speaking of the holding of case management conferences, this had already been a part of practice under the regular rules. The explicit reference to it highlights its significance in expedited arbitration and encourages tribunals to make good use of it. The utilizing of technological means is another important feature, like the holding of case management conferences. The utilizing of technological means had also been a part of practice in regular arbitration, but this is another feature to be underscored. Finally, and importantly, reliance on documentary evidence is a feature that is amenable to fast-track arbitration. In expedited arbitration, tribunals may decide not to hold hearings, and witness statements will be submitted in writing, basically. So we then turn to the other side of the key features, the safeguards. One might hesitate to opt for expedited arbitration if the rules did not take into account exceptional circumstances at all. To address this, the EAR provides some flexibility as follows. The periods of time, for example, for the communication of statement of defense may be adjusted as needed insofar as it does not exceed the overall time frame. In exceptional circumstances, at the request of one party, tribunals may determine to move the dispute out of expedited arbitration and into regular arbitration. While tribunals may decide that hearings not be held, hearings will be held if parties so request them. Finally, the ultimate safeguard is that the EAR only applies when parties agree to refer their dispute to those rules. In other words, no parties are forced to settle their disputes under the EAR without explicit consent. So based on my own experience as a judge and a litigator, I would like to share some concluding observations as to why it would be advisable for agile businesses to settle their disputes through arbitration under the EAR. As I have in the slide, in a panel of multiple decision makers, in practice, there is usually one person who plays the lead role in decision making. So if you choose the right experienced and qualified professional, you are likely to get the right decision. In my view, there is very little to be concerned about in having a sole arbitrator conducting a proceeding. I shall also add that in court proceedings, a sole judge is the standard in many jurisdictions, including Japan. Another point I wish to make is that 6 months is actually quite a lot of time. In Japan, the average time for concluding cases in courts has been around 8 months in recent years. This is speaking about an average duration of cases in courts where a variety of cases, including those extremely complex and fairly simple, are dealt with altogether, and judges have about 200 cases to handle at the same time. This might help to give a sense that 6 months for making the award is not too short. Whereas the government and big companies need time, perhaps for review and coordination in drafting submissions, the same will likely not apply for agile businesses, including MSMEs. This is indeed an enabling factor for swift exchanges between the parties in expedited arbitration. Lastly, as my final point, I wish to point out that outcomes of cases are largely dependent on undisputed facts and documentary evidence. In my experience as judge, I would always have a very clear idea of how a case should be decided prior to witness hearings, meaning based on documentary evidence, and quite honestly, have not really come across a case where I completely changed my mind after hearing witnesses. To be clear, I would not really deny the usefulness of witness hearings, as they would often give a judge confidence in deciding on a dispute and help the drafting of an accurate reasoning. That said, if we are just simply looking for the right outcome, relying on uncontested facts and also documentary evidence, as the EAR sets forth, may be sufficient. By conveying my own message as to how UNCITRAL can bring a positive impact on arbitration, this brings me to the end of my presentation. And in my final slide, here's the final slide. The gentleman on the right is Mr. Andres Hanna, a very good friend and the chair of Working Group 2, who successfully guided the discussions to reach consensus on the expedited arbitration rules. I don't have any photos of my dear friend Jay because we have him live today, but in any case, both Andres and I agree that the successful outcome owes much to Jay's excellent work as secretary for the working group. And my final word is that we trust businesses will find the EAR useful. And with that, I conclude and hand over back to Jay. Thank you.
Thank you, Takashi, for keeping the time that we had allotted to everybody. We have about 4 or 5 minutes for Q&A. There is a question to Sue in the Q&A, but I'll actually pose just one question to all of the panelists for a 1-minute response, and then we'll actually close the last panel for the Incheon Law and Business Forum. My question to Maggie is whether there are businesses actually face any hesitations about using mediations. In your case scenario, you had mentioned the finding of a young listener, influential mediator, but it's sometimes difficult to find such a mediator. So would there be is that one of the reasons for hesitating to use mediations? That's my questions to you, Maggie. My question to Sue is KCABC's experience in administering expedited arbitrations, either under your rules or possibly under the UNCITRAL expedited arbitration rules. And as I mentioned, whether you have any measures in place to provide a level playing ground for MSMEs, particularly against larger companies. My questions to Sarah would be, you had mentioned your experience with expedited arbitrations, but you didn't hint at whether it was the MSMEs that were using it more or whether it was the larger companies. So I was wondering whether you have any statistics that you can share about the use of expedited arbitrations by MSMEs. And my last question to you, Takashi, would be, Sue and Sarah mentioned these words. I mean, Sue mentioned it 10 times. Public function of the KCAB, and Sarah mentioned the public service elements. I was wondering what kind of a role the governments play in providing these kind of ADR services to MSMEs. So with that, I give 1 minute to Maggie, Sarah, Sue, and Takashi. I have promised Achita that I will finish on time, and I will try to keep that promise. Maggie, you have the floor.
Okay, thank you. I think the first obstacle is less than 1% of MSMEs have in-house legal team. So the business owners heavily rely on the outside counsels, but the outside counsel can only be helpful once they are provided with the right information. If the owner are not legally experienced, they don't know what information to share, the outside counsel cannot be helpful to the business. Without the proper guidance in their case, sometimes the parties may have wrong judgment of their case. I think that's one obstacle. The second one is, you're right, it's very difficult to find the mediator. It's of vital importance. The mediator must have influence on both parties. I think government can play a big role in mediating disputes because they kind of have influence on both parties. Yeah, that's my 2 cents. Thank you.
Thank you. Let's go to Sue.
Yes, I think you had like 2 or 3 questions. So I'll see how much I can remember them and answer them. So about KCAB's experience using expedited rules, the feature about KCAB rules, expedited rules, is that it's an automatic application based on the claim amount. So the threshold there is 500 million Korean won, which is about 380,000 US dollars. This feature was included because small companies or companies with small claims don't really have the luxury of considering or making applications for the opt-in application of an expedited procedure rules. So just to make things, streamline things and make things efficient, unless parties agree to opt out of the expedited rules, it's an automatic application. Of course, I think the UNCITRAL expedited rules can still be very useful, even in the context of KCAB claims, because sometimes parties, just merely by the fact that one arbitral institution rules was suggested by the other party, that they might feel a bit of caution. So the name of UNCITRAL, the fact that it's a well-known international organization, and that rules have been melded and molded through the concession of various national representatives, I think will carry some weight, which will encourage parties to use the expedited rules under the UNCITRAL rules, of course, which can be administered by standing arbitral institutions such as KCAB and HKIAC and other institutions as well. How we level the playing field between small companies and large companies. To be neutral, it is impossible to help or coach the smaller companies on how they conduct the arbitral the procedure. It's the one thing that one can only hope for is that the smaller companies will have proper legal representation and proper counsel of how to deal with it. But there are certain small points where the Secretariat can, within the rules, assist. For example, if you have a small company trying to file a large amount claim towards a non-responding large company who may simply just not respond out of strategic consideration, the KCAB has discretion of whether to appoint only a sole arbitrator versus a 3-panel arbitrator. The reason why the 1 person versus 3 person is a big difference is the cost, obviously, of the tribunal. So if the circumstances are such that the large company obviously is not going to respond and try to create more costs and trouble for the small company, within the discretion, the Secretary will probably lean towards a sole arbitrator. Those small subtle differences and caution are some ways that we can help level the playing field. But overall, I think the legal representation, language, it's all a hurdle for small and medium companies. And I think there should be a systematic and intra-institutional effort to assist that.
Thank you. Sarah, you have 1 minute.
Thanks, Jay. So I don't have the statistics as to how many of the cases that are under expedited proceedings involve MSMEs. It's a bit of a mix, I would say, but I would also say that of those cases, that's where we will find many MSMEs. I do observe that on the spectrum of approaches to expedited proceedings, we have at the one end KCAB, which is an opt-out situation, and then UNCITRAL, which is an opt-in. And I think HKIAC is in the middle, in that you apply for the rules, and then if you agree to our rules, and then if you apply for EP, we will decide whether or not the case is suitable. So even if a case comes under the threshold, if it is of such complexity, even though it's a small case, we may not grant the EP application. And that does happen, especially in cases involving allegations of fraud or misrepresentation where a hearing is going to take place. In terms of government efforts to support businesses over the pandemic, there were efforts by the Hong Kong government. They put in place a COVID-19 dispute scheme. That's not something that was run by us. It was run from a government funded body, but we did participate in providing feedback on the rules for that scheme. And then the government in Hong Kong, in addition to, there is a small claims tribunal system in Hong Kong, but also under the civil procedure reforms in Hong Kong several years ago, there was a mandatory attempt at mediation for civil disputes, such that if you refused mediation and then lost in your litigation, you would be potentially looking at cost sanctions because you forewent the option of mediation.
Great, thank you. Takashi, last speaker of the day.
Yes, great honor to be the last speaker. And responding to your question, I think the starting point, as it's one of the probably the services that KCAB provided, as Sue mentioned, as being a public service. Is the starting point, which probably is information sharing. Unless the MSMEs know about what options are available, they have no choice but to opt for whatever they know about. So I think, like, speaking of expedited arbitration, just simply as posting it on a website would be helpful and give them a chance to opt for the best available choice. But I'm sure that MSMEs would want to be assisted a little bit further. What we do in Japan is that we provide like a one-time consultation with external counsel so that they make the right choice. I think their choices are kind of case specific. So I think that would actually help them make the right decision and which path to take. I'm sure that they would want to be assisted a little bit more, maybe waiving like application fees or any kind of legal expenses would probably be welcome, but in a government position, there are multiple considerations to be had. We can't just be helping MSMEs, so it could be a little bit difficult. But still, what came to my attention quite recently is that there is like an insurance scheme to provide like assistance for legal expenses. What we have in Japan is for intellectual property cases, cross-border ones. We have this insurance in place, so maybe the scope can be broadened. It's privately run, but still governments can assist in promoting that as well. So yeah, I will stop here. Okay, thanks.
Thank you, Takashi. I think you need to also have strong institutions like KCAB and HKIAC to support MSMEs. You also need a strong court system to support those institutions. So I think that's something that we need to grab from this. And then one of the questions that is posed in the Q&A is, of course, MSMEs that are involved in international trade would face language issues when actually they have to address disputes arising of with a different company using a different language. Of course, that is something that has to be resolved as well. So with that, I think we've kind of shared what kind of issues that the MSMEs face in international disputes. And I think we've gone through some of the options that are available to them. Before I forget, we have to take a group photo before I hand the floor back to Un and Adita. So if the moderator, the speakers can look into the screen and then wait until Un gives us the go sign to let us go. Are we done? Thank you. I think I heard the sound. Yeah, I heard the sound, so it's back to you and Ajita. Thank you. Thank you, everybody.
Thank you very much, Jay, and all the other speakers. To conclude the second Incheon Law and Business Forum, may I now invite Ms. Adita Commander, Head of RCAP, to deliver the closing remark, please.
Thank you, An, and good evening from the UNCITRAL Regional Center for Asia and the Pacific in the Republic of Korea for these brief concluding remarks. At the outset, thank you so very much to all audience members for actively engaging these past 2 days in UNCITRAL's efforts to help MSMEs weather the economic storm via legal harmonization, especially post-COVID. To revisit the event, we invite you to access the Incheon Law and Business Forum event page for conference materials, recordings, and UNCITRAL resources. On behalf of the organizers, we hope our collective efforts have brought UNCITRAL and Incheon a little bit closer to you, even though we cannot yet meet in person. To our esteemed speakers, your continued input will be invaluable as UNCITRAL assists states in adopting and implementing simplified small business registration, incorporation, and insolvency regimes, and as UNCITRAL explores how legal harmonization might further enhance MSME access to credit, the digital economy, and dispute resolution. A heartfelt thanks to UNCITRAL key partners, the Ministry of Justice of the Republic of Korea and Incheon Metropolitan City for enabling RCAP to promote the work of UNCITRAL and service our stakeholders throughout the Asia Pacific. We are most grateful for your continued support and friendship, even more so as RCAP embarks on our second decade. A huge thanks to principal supporters HKIAC, especially Sarah, Karen, and Chloe, for wonderfully supporting our beautiful conference materials. and KCAB International, especially Sue and Hyun, for making this hybrid event and many others possible from these well-equipped modern premises. Last but definitely not least, my personal thanks to my moderator colleagues from Vienna who are still lurking here, Monica, Yanying, Alex, and Jay, and of course, the sleep-deprived UNCITRAL RCAP team. For expertly emceeing and coordinating this event, Jenny for professionally facilitating the logistics, Taeyeon and Ginny for the strong administrative support, and our wonderful interns, Sergey and Jing, whom you may recognize as the very diligent RCAP 2 and 3 in the chat box, and intern note takers, Hogan, Renat, and Melody. Any mistakes are, of course, my own. My colleagues have tried to dissuade me from too many puns in light of the forum's meteorological nautical theme, but seeing as we are at the end, I just cannot resist. While the last 2 days have been stormy in our corner of the world, things are finally clearing up. And tomorrow we should be awakening to clear blue skies. UNCITRAL will continue to work towards the same for MSMEs. And with your continued support, we will achieve these goals. Please join us in navigating these waters by reaching out to uncitral.orcap@un.org with questions or collaboration proposals at any time. Thank you all again for making this year's forum so successful. UNCITRAL RCAP looks forward to welcoming you at our next event. Thank you.
Thank you very much, Adita. This is the end of this year's forum. On behalf of UNCITRAL RCAP, the Korean Ministry of Justice and Incheon City, may I express our deepest gratitude to you all for participating in the forum the past 2 days. It's been our pleasure to hear your valuable experience and insightful perspective during the forum, and it will be invaluable to us for future work of UNCITRAL. We hope that you have found the 2-day event interesting and useful, and we hope to see you soon again at our upcoming events and hopefully in person. May I wish you all good health and a good afternoon and good evening. Thank you.